Hello friends, welcome to CEC live lectures on management accounting. The topic of today's discussion shall be activity based costing, but before that I shall be telling you about the strategic cost management, and in that strategic cost management we had already discussed about different tools like Kaizen costing, life cycle costing, target costing. So first I'll be telling you about what is activity based management, and then we shall move on to the main point of our discussion today, that is activity based costing. So let us start with the activity based management, what exactly it is. Activity based management basically emphasizes on management of activities with the two important objectives. First is to improve the value received by the customers. So whatever the value set customer is receiving, that need to be improved, and eventually the second one is profit earned by business enterprise. So in this entire process of activity based management, our total emphasis is on two important goals or two important motives. First is to improve the value received by the customers, and the second one is how to ensure that profit should be maximum, or profit earned by business enterprise is going to improve. So what we do into it, what exactly we are doing into activity based management, we are basically classifying all activities as value added or non value added. So basically we are going to segregate or reclassify the different activities of a business enterprise with this perspective, that which are the activities, which are the costs which are adding some value to our product, and which are the costs which are not at all adding any value to our value chain or the product. So if you remember, when I was telling you about the different pillars of strategic cost management, I told you about value chain analysis as an important pillar of strategic cost management, and here is the technique which actually applies that value chain analysis. Here we are classifying all activities of business enterprise in terms of value added and non value added category. Value added activities, basically when I have to define, I would say that they increase the worth of a product or service to the customer. Either it is increasing the total net worth of a product, or it is offering you some additional service. When you are looking at the product from a customer's point of view, it is basically acting as a product and services envelope, that along with the product you are having some additional service or you are having some additional features. That is what ABM tries to do. If I have to give an example of it, for instance, there is inclusion of a panoramic sunroof to a car. I'm going to buy a car, and my automobile service provider company, whichever company I am resorting to, that is offering me a panoramic sunroof, that see, this is going to be an added feature to this product. So by simply adding that value, it is making the product attractive, or you can say company is gaining some strategic or competitive advantage. So this is called value added activity. Whereas there can be some non value added activities about which I don't care as a customer. For instance, the cost of storing the product before sale. Suppose if I go for buying a product in the market, and my supplier is saying that, see, where the place where I'm storing these products is very costly. I'm paying huge rent on account of storing this product, because the area in which you are residing, the rental cost is very high. So do you think that customer is going to pay? Answer is no, because it is a non value added activities for which no customer is going to pay or shall be willing to pay. So we have to identify the activities which are value added and the activities which are not adding value to the entire value chain or to the product. So what is the objective of ABM? Here objective is to reduce or eliminate non value related activities, and of course when I'm eliminating those non value related activities, they are going to eliminate the cost also, because every activity has some cost. If some activity is there, I have to pay some cost on account of that, and if that activity is going to get eliminated, obviously that cost shall also be eliminated. So attention to ABM is a part of continuous improvement of operations and activities, where we are continuously on a move or on a mission to identify non value adding activities to be eliminated. We try to eliminate them so that our cost can be minimum. And it comprises of what ABM comprises of. It comprises of cost driver analysis, activity analysis, and performance measurement. So these are three important types of analysis which we conduct when we are going for ABM, that is activity based management. We try to identify which cost is basically a driving factor. So cost drivers we have to identify, and then we try to identify the rate so that the overhead can be allocated to a product. Then we go for conducting an activity analysis, and obviously the performance measurement, that whether it is adding some value to the product or not, and accordingly we take a decision. Just do remember that this entire technique of activity based management is completely dependent on activity based costing, because the entire data is emanating or coming from that place only, that is activity based costing. So if you wish to understand what is activity based management, knowing activity based costing is essential, which I am going to discuss with you very soon. And ABC answers the question of what do things cost. When we will be conducting ABC, that is activity based costing, we shall be answering to the question of what do things cost. Suppose if you are producing a product, what exactly shall be the cost? Whereas in ABM the perspective changes. Here the perspective is what factor causes cost to occur. So in ABC we are basically acting as an accountant, where we try to account for those costs which we have incurred, whereas in ABM we try to find the answer to a question, what factors cause cost to occur. So if we can identify those factors, we can take care of those factors, we can stop or defer the occurrence of that cost also. That is the basic philosophy behind this activity based management. And here we focus on how to redirect and improve the use of resources for increasing the value created for customers and of course the other stakeholders. So our complete goal is to redirect and improve the resources for increasing the value created for all stakeholders, and of course the focus is on customers. So this was about activity based management, and now we shall talk about activity based costing, which is going to be the main focus, the key focus of this lecture of mine. Here I will first be telling you about the traditional costing system versus modern costing system. How do they differ? What is the difference between the traditional costing system and what we call as modern costing system? And then what is the need of activity based costing? Why do we need activity based costing? Is it really needed, or it is only you can say a tool in fashion where we feel that it's a new name and we should go for following that? Then we'll talk about different stages and flows of cost in ABC, and eventually we'll discuss about how to apply ABC in an organization. So let us first understand what was there into traditional costing system. If you remember, when we started our discussion about costing or management accounting, we talked about the cost of production and periodic cost. When we were specifically speaking, when I was telling you about the marginal costing and absorption costing, we had this discussion about the product cost and the periodic cost. The product cost essentially involved material, labor and overheads. There is a reclassification of it, there is a rearrangement of it here. I have not written material, labor and overhead. We have written direct labor, direct material and factory overhead, which was basically the prime cost plus factory overheads. And there were certain costs which were based on time. That is administrative expenses, selling expenses, it may be rent of office, it may be salary of your employee. So the traditional costing system used to broadly classify the cost in these two categories, the product cost and periodic cost. And if you remember, this product cost used to appear on the income statement only when goods were sold. So the moment goods are being sold out and selling price is being shown on in your income statement, these costs basically used to appear on the income statement. And prior to that, you must be thinking where they were. Prior to that time, they all were stored in the balance sheet as stock in trade. Because unless goods are sold out, you cannot account for those values into your income statement. So costing department had already given you the cost, but the selling price is reflected only the goods are being sold. Whereas periodic cost, they used to appear on the income statement of the current period, because these are the costs which in any case you have to bear with. So this is what we have been doing as far as traditional costing system is concerned. So in traditional costing system, again when we talk about product cost and periodic cost, there was no problem at all with regard to direct labor and direct material. They were easy to trace to products because they were directly linked to a particular product about which we are talking, and since primarily they were belonging to a specific product, it was very easy to trace them to a specific product, and we were allocating it because their nature was direct, that is direct labor and direct material. But the problem comes with the factory overhead. How to allocate this factory overhead to different types of product? This was basically a problem. This have always been a problem. How to charge, how to allocate this factory overhead, how to get these overheads absorbed. That was a question in front of cost accountants. And traditionally what we have been doing, that also I need to tell, then only you can compare. So typically what we were doing, we were using one rate to allocate overheads to products. We were only using one rate, and very often that rate was based on direct labor in rupee or direct labor hours. So we were basically putting this direct labor in terms of rupee or direct labor hours as a basis for allocating these overhead costs to a product. So this is what we have been doing into traditional costing system, and this made sense also. This was regarded as sensible step also, because direct labor was basically a major cost driver in early manufacturing plants. So initially those machines were basically labor intensive. Since we were working with labor intensive machineries where the greater proportion of cost belonged to that direct labor. So it was sensible step that we need to base our entire factory overhead in terms of direct labor hours or in terms of direct labor in rupee, suppose if I am going as per the value. Whereas in traditional costing system, the problem was that manufacturing processes and the products they produce are now more complex. Now the problem with traditional costing system is that it is not able to match with the modern process of production. So the process is changing. You must be thinking, sir, traditional costing system was good. You have been teaching us, we have been witnessing, we have been calculating. So what is the problem with that? The only problem is that this traditional costing system is not sufficient enough, is not having those tools and techniques which can match with the modern manufacturing processes, because they are more complex. And suppose if we decide that no, we are not going to change our traditional costing system, we will go ahead with that only, this may result in either overcosting or undercosting. So suppose you must be thinking when it is going to cause overcosting and when it is going to cause undercosting. Obviously when your product is very simple, the simple products are going to get too much of factory overheads, whereas the complex products, they are not allocated an adequate amount of overhead cost. So the question comes, how to allocate, where to allocate, how to basically find a judicious base for allocation of these costs. So answer to that question is to understand, to identify a costing system which is in sync with the modern requirement, to which we can call as modern costing system. I don't say that you need to replace the traditional costing system, but I would rather use a term called customization of traditional costing system. We have to customize our traditional costing system, and this can be called by us as modern costing system. So the entire traditional costing system is not going to be questioned by us. It requires some modification. Now why do we need such modification? Because today's manufacturing plants, they are more complex and they are often automated. They are not labor intensive unlike the previous period, and they often make more than one product. Nowadays creating one product is not the trend. A company is manufacturing one product, and out of in that process of producing one product, they have multiple byproducts. So in this entire process, suppose if you are starting a process, that process is giving you 4, 5, 6 products, at times 10 products. So this entire complexity of manufacturing process, it demands for some modification into our traditional costing system. And not only that, today's manufacturing plants, they are using proportionately smaller amount of direct labor, making direct labor a poor allocation base for factory overhead. So earlier the logic which we were giving for taking direct labor as a base for allocating factory overhead is no more justifiable. Reason is because now the major cost doesn't belong to labor, because your machinery is doing everything. So the question comes how to go for it. So when the manufacturing process is more complex, then multiple allocation bases should be used for allocating overhead expenses. Obviously, when the process is complex, we need to use why to use only one base? Because labor is a very small part of your manufacturing cost. Suppose if that is a scenario, then multiple allocation base is required. And when you have to use multiple allocation bases, the only solution is activity based costing. Identify those activities. So in such situation, manager need to consider activity based costing. So this is the genesis of this costing method, that why do we use activity based costing. Now the question comes, how do you define ABC? It is basically an approach for allocating overhead cost. What we do here is an activity. First we need to understand what is activity. Any event that incurs cost is an activity for us, because we are cost accountants. So we cannot call any activity an activity, any event an activity, unless it incurs some cost. So if any event is occurring or causing or incurring some cost, that is going to be an activity for us, and our entire costing is going to be based on that activity. So here what we do, we identify the cost driver. Now what is cost driver? It is any factor or activity which has a direct cause and effect relationship with the resources consumed. So if any factor or activity, it is having a direct cause and effect relationship with my resources consumed, it is going to be a cost driver for me. Now the question comes, what are the stages and flows of cost in ABC? There are two primary stages in activity based costing. First is tracing cost to activities. So we try to trace that cost to activities, and then tracing activities to products. So between the product and cost, what comes? The activities. So between product and cost comes activities. First we trace cost to activities. Earlier we were tracing cost directly to product. Now what we do, we are having a via mode. We are first tracing cost to activities, and then we are tracing activities to products. And for that we have a well defined steps. What we are doing here is different steps in two stages of ABCs are: step 1 is we identify the main activities of organization. For instance, it can be purchase, it can be receipt, it can be dispatch, and it can be any activity depending on the nature of your business. So we have to first identify the key activities of my organization. So the step 1 will be, suppose I have identified that purchase is basically my key activity, purchase, receipt and dispatch. These are my three activities. I have completed step 1. Step 2 is you have to identify the factors which determine the cost of an activity, which is known as cost drivers. So we have to identify those factors which determine the cost of that activity, which means we are going to identify the cost drivers. Now what can be the possible example of cost drivers? It can be number of purchase orders, how many purchase orders you are placing with, how many orders you are delivering, and so on. So depending on your activities, you are identifying the cost drivers, and once you have identified the cost drivers, you have to go for step 3, that is collection of cost of each activity, which is known as cost pools, and they are equivalent to traditional cost centers. Just like we were identifying the cost centers in traditional costing, we are doing the same thing here, but we are giving it a new nomenclature called cost pools. So we are collecting the cost of each activity, which is known as cost pool, and the next step is we have to charge support overheads to the product on the basis of their usage of activities, which is expressed in terms of chosen cost drivers. So whatever cost driver you have identified, you have chosen, accordingly you are charging support overheads to them. So suppose if I have to give an example, suppose total cost of purchase is rupees 2 lakh and number of purchase orders are 1000. So total cost of purchase is 2 lakh and number of purchase orders are 1000. So for suppose if we have chosen the purchase order as our cost driver. So I am giving you an example. We have chosen cost order as purchase order as our cost driver. So the product would be charged rupees 200 per purchase order. Now you must be thinking, how did we calculate? Very simple. Take total cost of purchase and divide it by number of purchase orders. So 2 lakh rupees divided by 1000 is giving me a rate of rupees 200. Now Suppose if you are having a batch generating 4 purchase orders, we shall charge 800 rupees. 4 orders into 200 rupees per order. We are telling that 800 rupees is for purchasing overheads. Very simple. So we are basically identifying the cost driver. For chosen cost driver, we are trying to find out the cost which shall be charged to that particular product for purchasing that overheads. Now, if I have to summarize this entire steps in ABC, I would say first of all we have to identify or determine the cost drivers, then we go for creating activity pools, and after that all overhead costs are allocated to one of the activity cost pool, and eventually we identify an overhead rate. We calculate that overhead rate for each cost pool using the formula, and formula is very simple: cost in activity cost pool divided by base. Whatever base you are taking, suppose if it is labor hour, you will divide it by labor hour. Suppose if it is machine hour, you will divide it by machine hour, and the base is of course the cost driver. And after that overhead, eventually, or the last step is that overhead costs are now allocated to each product according to how much of each base the product uses. So simply speaking, what we are doing here, that in place of taking direct labor as a base, we are having different bases and we are computing the rate, and accordingly the overhead costs are allocated to each product in proportion to how much of each base the product is using. In place of simply basing it on direct labor, we are having different bases. So let us understand it by a very small example. I am going to show it to you by a small example. Assume that a company makes a product and the management has decided that, see, now we are going to install an ABC system. So we have to first identify the overhead cost and drivers. They are determined. Suppose that management has decided that direct labor hours, machine hours and number of purchase orders, these are going to be our cost drivers. See, depending on the nature of your activity, your cost drivers can be different. So it is only to exemplify that management has decided that all overhead costs have only 3 cost drivers, and accordingly you are going to allocate. And this is your extract from general ledger, where you have workforce taxes, machine maintenance charges, purchase department labor, fringe benefits, purchasing department supplies, depreciation on machinery, electricity expenses and unemployment insurance. These are the expenses extract from general ledger, and now you are asked to classify them on these 3. You have to allocate them to one of the activity cost pool, and the activities are direct labor, machine hours and number of purchase orders. So the question in front of you is, which overhead cost do you think are driven by direct labor hours? You have to first identify that out of these given costs, which one belongs to direct labor hours, and that obviously depending on the nature of activity. I will show you the way we have to classify. So just like this, you have to identify for each and every cost driver, for each and every base which you have chosen. So for direct labor, suppose if you ask me, I would say that overhead driver by direct labor hours can be, first of all, the workforce taxes. If you look, the workforce tax, obviously it belongs to workforce, so it should be it should go to direct labor. The second one is basically the amount of 2000 of fringe benefit, and the last one is basically your unemployment insurance. These 3 items directly belong to direct labor, so we will put them together and say that direct labor cost is 4500. So overhead driver by direct labor hours we have identified. After that, the next one which comes in front of us is machine hours. How to identify the cost drivers for this machine hours? Which overhead costs are driven by machine hours? Which overhead cost belongs to machine hours? So I am showing you first of all the maintenance of machinery, rupees 500, that we have taken here. The second one is depreciation on machinery. The third one is electricity, because machine is going to consume the power also. So if we club them together, we get an amount of 2500. So we have identified the activities which identified the overheads which belong to machine hours, and just like that we have to finally identify the same for overhead cost that are driven by number of purchase orders. So very simple, since other 3 plus 3 6 activities, 6 costs are identified that they belong to direct labor and machine hours, remaining may belong to number of purchase orders. Let us see which one belong to them. First one, purchasing department labor, that belongs to this particular cost, and second one is purchasing department supplies. So in this way we have calculated all 3 costs, and we know that the formula how to identify the rate. Cost in activity cost pool divided by the base, that is going to give us the rate. And suppose my organization is giving me the following bases: direct labor hours is 1000, machine hour is 250, and purchase order is 100. Very simple to calculate. You have to simply take up these costs divided by base. So let us start with direct labor for identifying ABC rates. First is 4500 divided by 1000. It is giving me rupees 4.5 per direct labor hour. The same process we shall follow for machine hours and number of purchase orders. And the second one is giving me the 10 rupees per machine hour, the rate of 10 rupees per machine hour. And the third one is giving me rupees 42.50 per purchase order. So with this rate we can very easily, with this calculation we can very easily identify the rate. And finally what we have to do, since these rates are with us, we can now allocate the overhead cost to each product according to how much of each base the product is using. So this seems very scientific, and it is increasingly being used by those organizations which are fulfilling those conditions. So with this I am ending today's lecture of mine. I hope you must have understood the basics of activity based costing. In future we shall discuss some numerical problems on this as well to clarify your doubts as well. Thank you so much.